Anyway, I'm glad you're on here, Alex. If you don't mind, I got an email stating you guys might have some new products that came out.
Yeah. I mean,
I'm kind of curious about that since you're here. I was going to give you guys a call.
Say, our products have actually been live for a little bit, but we've been, what's the right word? We've been trying to make sure that we work out as many of the kinks as possible before we blast everyone and tell everyone. Because, like, you know, a loan product might be live, but on the sales end, right, we still need to learn all the like the little nuances of figuring out, oh, okay, this is what we need to do to be able to make this work. But yeah, like, did you have a particular one that you want me to run through first?
Like, what are your, like, some investor loans that you have? So there's like I don't have the email in front of me. So,
No
like how much, what's like the lowest down that product that you have? Are they all 20% down? It looks like there's some longer term amortizations on some of those products.
Yeah, so I'll break it up broadly into, one to 4 unit first, 1 to 4 unit properties first, because 5+ multifamily is a different beast. So for 1 to 4 unit properties, we have like our standard hard money type loans, right? For fix and flip or fix and hold deals. We also have like the long-term 30-year fixed loans that we can offer on both short-term rentals as well as just like standard rentals. We also have a 30-year fixed bank statement-based product that's really aimed at borrowers who may have like very non-traditional lease situations. So like think corporate rentals, think, like just very, very alternative scenarios, right? Like possibly like a halfway house or something, or maybe they're leasing it like just non-traditionally. So that's kind of.
And are those non-owner occupied?
Yeah, so this is all non-owner occupied. We are not licensed or able to lend on anything that is owner occupied.
Okay. And then what's the lowest down you can have on those?
So for our short-term product, for a highly experienced borrower, right? Say someone who has 10 flips under their belt in the last 3 years, we can leverage as high as 85% of the combined purchase plus renovation budget. With an exception, like a non-complex project, good location, we can get to 90%. And just like, just for a quick number's sake, just to help you envision that a little bit better, like let's say you're looking at a purchase price of 150K and a renovation budget of 50,000, so you're all in for 200. 80% of that, right? 85% of that, right, would be 170. 50 held back for the reno, 120 up front for the purchase financing. So you're looking at a $30,000 down payment in that scenario. And then 90% would be 180, 50 held back, 130 up front, $20,000 down payment.
And what's the hold time for that?
So those would be 12-month notes. We can do like, and the interest rate on that, again, for a highly experienced borrower, like someone with 10+ flips, we'd probably be somewhere around like the 10.25 to 10.75 range with 1 point. 12-month note, obviously no prepayment penalty, interest only payments. And then we have the ability to do maybe a little bit of a longer term, like an 18-month term, maybe for like, an extra quarter point or something like that.
Okay. That's good to know. Do you have any like 40-year amortization products?
We do not. That is something that has not. Yeah, I've heard of folks wanting longer amortization products. Like our max of what we'll consider is going to be 30-year amortization.
Okay, and what's the interest rates on that?
So interest rates. Interest rates are going to vary a little bit. Like there's a decent number of factors going into it. Broadly speaking, right, we can go as low as like with low leverage, high credit score. We can go as low as I think like 7.5% for a 30-year fixed, with 1.5 points. Keep in mind that's for low leverage, right? That's not for max leverage. If you're in a situation where you're just like, look, I just need like 60% LTV or something like that, we can get down to that area. On the other hand, right, if someone has maybe a lower credit score, like something in say the 680 to 700 range, we're probably going to have rates like in the high 8s to low 9s. So it's a
Yeah.
decently broad variety. And there's a fair number of things that go into trying to price that out. I don't think I can get into like everything that goes into the pricing.
Yeah,
But
it's a lot depending on the project. And do you guys do the construction loans or
we do.
like a
So
30-year amortization?
well, so we do ground up construction loans. We don't do them with 30-year amortizations.
Mhm.
Like ground up construction loans are generally 12-month notes that we'll write on properties that are already permitted and planned. And I mean, our intention, like the intention with those, right, is get the borrowers funds to complete the development project, and then they either sell the property or refinance to pay down our note.
Okay, that's good to know, and put it in my back pocket here when I'm ready to get on to my next project. So
I will say that construction deals, they're more expensive these days, and it's not just certain lending, right? Like check with any other, like check with like Builders
yeah,
Capital or whatever. You're most likely looking at rates in like the 11 and 3/4 and up range, and like
yeah,
anywhere
that's
from, even for a highly experienced developer, you're probably looking at like 1.5 to 2 points, something like that.
yeah. And are these for commercial 5+ units? Is there much of a difference with any of the terms or the rates or anything or the costs?
So we're going to be more conservative on pricing and term, like on everything basically, for anything that isn't a like a 1 to 4 unit property. And I mean that's just because, right, like as a lender you can think of it in terms of risk, right? Lenders are
Mm-hmm.
always kind of thinking, okay, what happens if I need to take back the property? We're not in the business to operate a rental or anything like that. We're in the business to do loans. So I would need to sell the property at that point. And what's the easiest thing to sell? It's a 1 to 4 unit property. Multifamily is commercial. That's just harder to sell. So it's riskier. We're going to price them appropriately.
Mm-hmm. Okay, good to know.
Um,
Yeah, I'll jump in when I'm ready to get into my next project here. I'll probably circle back so I can find out some options. So, yeah, but I gotta pause. My house hacking is just like going on and on. It seems like with a 2.5-year-old, I need to do like a video on it or something, like the truth about what happens. But anyway, Shang, what do you have going on? We have a small group here today.
I'm
I haven't gotten back to you on Messenger, so.
Oh, okay, no problem. Yeah, so this is pretty much my second or third week officially being an agent. So I'm just kind of like,
Oh, okay, congrats.
yeah, so I'm just doing the foundation stuff and just talking to people and networking and just trying to get leads and stuff like that. Just pretty much just starting out doing the stuff that you're starting out with.
Yeah, are you investing? Do you have
Yeah,
any investing background?
I have just like one property that I had to buy and hold from a long time ago. I want to get more, but I'm just like learning still kind of. And I was doing wholesaling for like the past 6 months, and I took a break to kind of just like study for the course and become licensed, and just kind of starting out with becoming just a realtor.
Nice. Or who's your ideal client? Who are you trying to work with? Are you still trying to find that out?
Um, I'm open to like buyers and sellers, but maybe like first time home buyers or like house hackers,
Mm-hmm.
and just anything else really.
Yeah.
I just want to learn everything.
Mm-hmm. Yeah. Well, a little bit about me. I've been house hacking since 2016.
Mhm.
So this is like going on my 5th house hack, I think. And we've kept them all except for one. And then I've fixed up a couple of properties. I wouldn't say I flipped them, but
Mhm.
it was like cosmetic stuff, and the market just appreciated so fast. I mean, it was really easy then. And yeah, so I'm in the middle of a house hack, a seller financed house hack. so we have, since we moved from the other duplex recently, I am so happy we got one duplex up for lease right now. I am seeing a decrease of interest in the leasing part over here in Gig Harbor. And I am seeing properties sit on the market for longer over in Bremerton. It kind of seems to be following the trend with the housing, with the regular real estate market. About 2 months or so, it seems like it might take to lease up a property for some of the property.
Right?
Yeah, because I've been
Really?
like checking Zillow and checking like just some sites for the last couple months as we've been finishing up the renovations on our properties to get them rented. And it just seems like there's a lag time versus like a year ago. I do some lease ups for some investor clients. So I'll go in and I'll just lease up their property for them and hand them the keys when I'm done and they manage it. I had some of those investors a year ago call me up and be like, what's going on over there? Like they were leasing it up themselves. And they're like, I put this property on the market, but I just took it off and put it back on for 200 more. And I'm still getting like a ton of interest. So I am seeing that. Also, a property manager I spoke to in Bremerton said that a year ago she used to get I think she was a little bit exaggerating, but about 100 inquiries of a property, and now she's getting like 5 in Bremerton. So we are seeing that. So I've adjusted how I am leasing a property. So instead of trying to get like what I think the rent should be, like a higher rent for the property, plus utilities, I'm just lowering the rent amount a couple $100, and giving a sign-on bonus, like you can do $500 off for your first month or 2 weeks free or something. And then a utility payment on top of that, because those are some little tricks so that you pop up and you get someone in to tour the property versus someone else is getting that lower rent if you're going to have more competition. So that would be some piece of advice for anyone that might have some rentals out there, that I do, because getting someone in there quicker than having 2 to 3 months of vacancy and then slowly giving them a rent raise is better, in my opinion, than just trying to get the top dollar for the rent. So
do you actually live in have you lived in all the properties that you were house hacking?
Yes, okay. I have. Yeah. So I have been so just delighted lately because I am no longer like camping out in my properties, like sleeping on the floor, essentially. Like, I'll be quite frank, I have been just so frugal. And during the pandemic, we were supposed to be moving a lot quicker with that house hack in California. And we got stuck in a 350 square foot bottom unit when I was pregnant and I had a baby during then, with like my changing table for the baby was like on top of the vanity box that we needed to install, but we didn't want to install it because we had the baby in there. I had nowhere else to go and didn't want any of it was a 1920s property. So I didn't want any material dust floating around and stuff. So anyway, so that took a lot longer. And then we moved up back to Washington from California. We sold that property. It was just some different things. It almost burned down in 2020. I have a whole story. I think Joe's heard it a little bit before. But yeah, so that one, we're just like, it was like the property, there's always something going on there. Like, you're always getting a call on it. Like, the redwood trees almost fell onto the property. It's up against the wall or up against a hill. There's like a potential landslide risk, those types of things. So, just taking all of that into consideration, we ended up selling that. And then we have one in Gig Harbor, and we just moved to Bremerton. Okay. So, yeah, we have been living in all of them. And after doing this for 6 years, once we have even with like a decrease in the potential rents, possibly we'll still be, after I get the 2 vacant units leased up, we'll be living mortgage free. We won't have any housing payment.
Nice.
Plus maybe a little bit extra because we'll be giving rent raises for the other unit. So my goal when I originally started this was to have around $10,000 a month in passive income. It didn't quite turn out like that. I think it's a little bit interesting to make those goals because so much changes during the time of your investing. So, but we were able to use the leverage for other things that we needed in life during the past few years, and reinvest it in other things, and then be able to acquire these properties. So that's sort of my success is with this last property that just happened. So
for like a first-time home buyer, would they be able to use their like FHA loan to, if they're going to actually live in the property, to buy like a house to do that with?
yeah, a really great thing is you can use do you know about the FHA loan limits?
I know about the loan, but I don't know about the limit.
So anyone that is looking to do a house hack, they can buy a property up to 4 units. I'm not a lender, so there's all these rules and extra things you need to talk to them about. But yes, you can buy a property up to 4 units. So if you go to like FHA.gov and look up what the loan limits are, you can look up the county and see for like a 2 unit, it's like 980,000 in King County. For a 3 unit, it's like 1.2. For a 4 unit, it's like 1.7. So essentially, depending on what the other rents are in the property that you're buying, you could get into that property for a lower down payment. And then you want to check with the lender because that 3.5% down, if you're buying your first property, you still might have to bring in a little more down payment because that might seem very risky to a lender to loan on like a triplex or a fourplex as your first property, versus if you've done this a few times, they might be willing to give you more leverage, right? Kind of like what Alex was saying, like, oh, for someone who's done 100 flips in the past 3 years, so like the easiest thing for someone to get in, the easiest property, in my opinion, for a house hacker to get into, it would be a duplex. It's just one other unit that seems manageable. And you can use an FHA loan, a conventional loan, or a VA loan, which is amazing because you don't have to pay mortgage insurance with a VA loan there. So, and you can put 0% down, or maybe they'll even have more leverage because that's, the type of loan product that's there.
Right.
So yeah, you go to the loan limits, and then if you have any buyers or anyone, that's where I would direct them to so they can figure that out. I think if you were able to qualify with your income, maybe you could do like a jumbo loan, but you'd want to double check with the lender.
Thanks.
Yeah, the trick is with the 3 and 4 units is if you want to put down low leverage is to be able to I have a dog here and he's having some issues. Put down low leverage is to be able to have higher rents for the other units. So if the property that a buyer is looking at, or an investor for house hacking, if the rents on those other units are more towards market rent, then that's going to be easier for financing purposes. If they're really under market, that's going to affect the buyer's qualifications, especially in the 3 to 4 unit.
Well, how does it determine that when you haven't bought it yet, so you don't know what you're charging for rent unless there's already existing renter living there?
Yeah, if there's already an existing rent. If not, they're going to do a rent survey. If not, they're going to do a rent survey. Sorry, I have this dog here and he had an issue here. And I will tell you that the rent surveys will come in lower generally than even like a conservative market rent. Like the appraisers are just so conservative on that. So, and you can try to petition it, but they're probably going to not do that. So if you are getting a rent survey done, it is important, if you're working with a buyer or you're buying the property yourself, pull the rental comps and give to the appraiser. That's what I would do.
Can you just pull rental comps on MLS, or is there like a special site you go to?
I would just pull it on Zillow. You can look on Zillow, you can look on apartments.com, you can look on Trulia. You can go to Rent-A-Meter and pull some there. I think Door Profit. Yep, Rent-A-Meter, Alex. I've always used Rent-A-Meter first. I feel like it's good enough, and then I do my own analysis depending on where I'm looking to buy. Like, I'm a renter, I'd probably go look on Zillow. Ask your renter friends where they might be looking. Where do people look for rentals at? You could also call property managers and see if they have like an average in the area, that's like an average list of what a 2-bedroom 1,000 square feet property would look for, like, or rent for. What's the price per square foot for rentals in the area, and then see if they can give you any written documentation to like give to the appraiser or something like that.
Gotcha.
Yeah, so I would try that as well.
Sure. Not sure what the question was, but just kind of give insight there. Usually, if you're a first-time buyer, they will ask you, like some lenders I have seen asking that you must work with a property manager, and pretty much they can actually help you with everything, with the rent analysis, and they can actually pull all the information for you. So I have seen happening. We had one client, and we no longer serve that area, but it was a part of the requirement by the lender that other 3 units must be managed by a property management company.
Yeah, that can work too. Was that with a property that someone was living in?
Pretty much house hacking as well.
Yeah.
Fourplex, 3 of them were rental. So they asked for the rent analysis for the 3 units, but they were already rented out, but they were rented out way below the market. So the part of their requirements were there must be a property management company, and the property management must certify that the new rent is going to be pulling off, because they were running all the numbers on the whole deal was run on the new numbers.
Okay. And so is it Samant?
Yeah, that's correct.
Okay. Where are you based out of? I can't really see you. Your camera's off.
Not sure. Camera is on, but yeah, I'm local here.
No,
And,
no, you're like off to the side. I can only see your
yeah,
ear.
I just
Oh.
there we go.
Okay.
Yeah, I'm local here. I live in Kirkland area.
Awesome. Are you a house hacker or agent?
No, I
Or
am an
both?
agent, but mainly a property manager. I only manages single family houses.
Awesome. What
Yeah.
property management company are you with?
Next break.
Nice. What are the fees right now for property management, and what are you seeing in the market for single family homes over there?
Our fees is pretty would compared to other. It's lower than other places. It's 6% flat. We don't charge any. We don't.
That is very competitive.
Yeah, we don't give quotes out. It's just pretty much straightforward 6%. There is no up. There is no down. We don't discount pretty much. 6% for the management fees, and then 50% on the leasing fees, and then $250 for the lease renewals, and that's pretty much it. And regarding the market is I'm pretty sure everybody's seeing the slowness in the market, in the sales. I know sales picked up a little bit. I heard from some of the realtors, but the rental has a very high inventory. We are not increasing the rents anymore. Unless they're very specialized properties. Some of them we have like B's or ADUs in the back or something. Only those properties we're increasing the rent, but for everybody else, we're kind of standstill. For the properties we leased out last year, the market is slowing down dramatically for the rental value. A lot of cancellations.
Have you done any for the rentals? Like, are you lowering the prices on those?
They just, yeah, so we no longer chasing the highest possible rent. It's just not gonna happen. It's some properties, for example, like we putting a property in Kent this year, they actually terminating the lease. They lost the jobs, and that's the most common scenario we are seeing. So we leased out that property, I think for 42, 43. It's a brand new house. And now we're putting, I'm sorry, 34, 35, something like that. And now we're gonna put that property back on the market for I think for like $3,000. Because there is just so many other properties out there, and vacancy gonna eat out more money than the lowering the rent.
And are you getting calls from any Airbnb properties owners turning their properties into longer term rentals?
Honestly, no, we don't do that pretty much, but owners, I have yet to meet any agent who does very good at it, and I'm happy to kind of work with that person and kind of recommend some business too. But yeah, we don't, it's a reverse transaction. We get a lot of properties from the owners get frustrated because the agents, whoever they worked with in the past, kind of show them the world. But the reality is quite different, and they don't even make even the decent amount of money to pay the mortgages or even to compare to the long-term tenants. So no, we don't get much. Owners just try they rather lower the rent, because these properties are completely vacant. So they're not gonna furnish the property, spend thousands of dollars just to.
And I'm curious, what areas are you in? Are you in Kirkland, kind of east side only, or do you go down towards like SeaTac area?
Yeah, we have a lot of properties down south too. We have properties all the way to Puyallup. But after we cross Renton, we become very specific. Most of our properties down south are very highly renovated, or they are brand new.
Okay, and
Yeah.
so like, do you know, like for a 5-bedroom home, like what are your average price per square foot? Or do you have any sort of, I know it's kind of a vague
Yeah,
question.
it's could be very hard for me to define a 5
Yeah.
bedroom. It's not something I can answer without the full
Sure.
information.
Well, you should put your property management company in the chat.
Yeah,
So
sure.
I might have a potential seller. Well, they might keep their home, I'm not sure. That might turn into a rental. So
Yeah. So yeah,
I
we get
might
a lot
do-
of referrals because we don't sell the properties pretty much at all. We never sold the property, nor are we going to do it. So yeah, we get a lot of referrals from realtors who are worried about giving it to other companies who sells to. We strictly
Yeah.
don't sell. We don't sell at all.
Yeah, put your contact information in the
Yeah.
chat for anyone that's looking to do property management in their area. They have a 6% plus. I mean, you have to read the fine details, I guess, of what you're offering to compare. But it sounds like a pretty good offering there. So next brick, I'll take a screenshot of that. Okay. Awesome. Well, thanks for that information. So yeah, it's like a rental slowdown, a housing slowdown right now. I know I'm definitely seeing it. Some people just everything's just I feel like it's like a deer in the headlights almost. Like, and we're just starting to come out of that a little bit with the buyer confidence boosting back up, but we'll see what happens. So I think we had a question here. If you purchase a duplex and you run a business in one unit and rent out the other, does that qualify as owner occupied? If you have to live in the property, as far as I know. I mean, check with the lender, but that if you're gonna buy it more with a business, I wonder, I don't know, if you can use like a different type of loan product, like SBA loan or something like that, a business loan to be able to start the business to purchase the property. I'm not sure if something like that could work, but it really have to be a unique setup in my opinion. I don't know, I'm not a lender, but that's what I would suggest looking at. So are you trying to do that yourself, or is that for someone, Shang?
Yeah, I'm actually own a business, so I actually have an office space. So I was wondering if I were to like buy a duplex and then move my business to the duplex and run with the other, would I qualify for like a lower down payment loan?
If you're going to live in the property, then I'm sure that's fine because then your business is separate. You don't even have, I mean, that's, you're using it as your primary residence, but then you get to
Right.
talk to
But
your
what
CPA about the tax benefits.
But what if it's not my primary residence then, and I'm just running my business from there and I own it?
That's where I was saying maybe check into like I don't know. I know I've been looking into SBA loans or other types of business loans, maybe check with a credit union and see if anyone would do something like that. Because they're loaning on probably the business and what you have incoming from the business. So you'll have to talk more with them about that.
Mhm.
I'm still a little bit learning in that area there, but from my experience that's what I would look at. I know that we're trying to put we have this farm space. We're trying to put like a office / commercial kitchen on it and do some development. And so we've been looking at some other type of loan products such as the SBA. And there's a farm, it's not a farm loan, it's something similar to that.
I think
So
a business loan would be more like, would cost more than a regular home loan though, I think, right?
oh, I'm sure. Yeah. So but I don't know if Alex knows anything about
Okay.
that, but I would I think so. I mean, the lowest leverage that any lender I've seen out there give is just for the owner occupied, right? Because everyone needs a place to live. So they're going to work to make sure they have shelter because that's like one of the first rungs of Maslow's triangle is like shelter, right? So yeah. But check around, check credit unions and then maybe look up the SBA and things like that. Then you'll have that known as well. What type of business do you have?
I own like a retail store. So I recently moved from like a brick and mortar to office. And I'm like, and next year, I don't know if I'm gonna either like keep the office or because what my idea was like a couple years ago was I'm gonna buy a property and just run the business there because I'm paying rent anyway. So why don't I just pay mortgage and run my business because I could, most of it's like online sales. So I was wondering like, why don't I just pay mortgage instead of commercial rent,
Mm-hmm.
But yeah, that was a couple years ago when I thought about that and I never acted on it. But now that I'm not really like, I'm kind of transitioning out and doing real estate, but I still have the business. I was wondering if I could utilize that as a, owner occupied to acquire like certain types of loans and stuff like that.
Yeah, I would use find a property maybe like if you need space or something that has a large area to add a large storage
Mhm.
shed or like not a shed but like a garage type of space or talk to your CPA and see what you can do to maximize the other unit if you're going to use it for a business. So I think you'd have to have at least probably 20 to 30% down to go out and buy like a commercial space to use for a business or something like that.
Oh, well, I was just wondering because I wouldn't actually be living there, but then like,
Yeah, if you weren't going to be living there, then I think you have to have a larger down payment for sure, because
right,
that
okay,
might seem a little more risky depending on what you earn from the business. But
gotcha.
talk to a lender. I'm just going off of conversations I have around my entrepreneurial pursuits with lenders. So yeah. So also tax season is here. So something I'll share with everyone that I learned recently. I had my meeting with my tax advisor is because I'm a real estate professional, I can put my how I'm going to structure my properties is I'm going to have a parent company. So I'll have all my rental properties in its own S corp. Okay. And then I'm going to have, since I'm a broker, I'm also going to have my change over my business structure now to an S corp for my brokerage. So I'm going to have all these different S corps, and they're going to be under one parent company that is also an S corp, so that I have more asset protection, which I think is really important if you have rentals, or depending on what you're doing, is making sure you're protecting yourself along the way. And in addition, I can, if I have, since I'm self-employed, I have out-of-pocket medical expenses and such. All of that can be paid through the S corp, I guess, and treated somewhat like a write-off, essentially. So I am in this process of restructuring everything that I have. So I just thought I'd share that with anyone if they find that helpful at all. So, and just remind people in this time of year, it's really worth the while to pay a good CPA that's going to give you the help that you need, and not just get your documentation, have you sign something and file your taxes. So anyway, who is 253-988-5531? Is that anyone
Oh,
there?
that's me. Yeah, it's me, Paul Hemming. I'm a long-time investor, so I
Oh,
just
hi.
listen to what's going on in the market. Hi.
Awesome. Yeah, we're seeing, we were talking a lot about the slowdown in the rentals earlier. I don't know when you popped on, but I'm leasing up a couple units. I've been house hacking, so there's definitely been a slowdown for that. Alex is a hard money lender here, so we've been talking about the different loan products that they have coming out. And yeah, do you have any specific questions on what's going on with your investments or rentals or anything?
When you guys say the rental market's slowing down, are you talking about like Seattle and Bellevue where all the tech layoffs going on? Because we have not seen, I mean, my friends that have rentals in the Tacoma and Lakewood area, we haven't seen that.
Yeah, I think it's always property and market specific. But Samant here is with a property management company. So he can chime in maybe a little bit too. But yeah, for my rentals, I've seen the properties, they're not going within a week. It's taking longer to lease them up. There's more competition in some pockets. So the properties are just sitting on the market for longer. So if you want to get them leased up sooner, you just have to maybe, depending on what your goal is as the investor, maybe reprice them, or just sit longer until they're getting to get them leased up.
Okay, well, it was more a general question for me because as my units or homes become available, we're just liquidating. I'm at that stage of my career, so.
Yeah.
But people aren't moving, and I've said on this program before, I charge low rents because I don't raise them once people get in very much, and I certainly don't keep up with market. And so, yeah, I'm finding people aren't moving, but we're going to have to bite the bullet and just kick some people out because I want to do at least one home a year, maybe two. And, you know, where I still, you know, with remodelers and painters and roofers. So I got another question. I haven't invested out of state, before the real estate crash. And I want to buy at least one house down in Georgia. Can anybody give me any hints on how to select a realtor for investors? Again, it's been probably a couple of decades since I've done that.
Well, I'm a broker. And so what I do when I was looking out of state, for an investment is I picked my market, and then I made a set of what my criteria was, and I would reach out to those brokers. You know, one you can do by Google search, or maybe you can look up sold properties, like hit the sold button on like Zillow, or you can use, I like the HomeSnap app. And you can see who's selling in the area for those types of properties you're looking for, and then see if they work with investors after you have a consult with them, and see if they're going to follow up with you and call you back. Because if you're wanting to get going on it, you need to find someone who's a little more gung-ho, in my opinion, that's going to go out and actually search for those properties for you, or already have marketing and set in place to be able to help you find those properties. So that would be my and then also having a conversation around, do they know, you're looking to buy single family homes, 2 to 3 bedrooms. What are they seeing? How much do they usually rent for? What's the vacancy rate in the area? If you're buying commercial properties, do they know about what they're trading for in a cap rate? What type of those are some questions that I would ask the agent. And it's not always the agent that's selling the most that's going to be the one that's going to help you, in my opinion. It's going to be the one who's able to initiate and help you with your goals.
Yeah, usually what I've found is when agents get to be even in the top 20% of agents, they're done with investors. We're hard to work with, and not as much money. Of course, anytime anybody brings me a property, whoever brings it to me, I take it back to them, and they give them 90 days to sell it. So that's always got me referrals.
Yeah. So I would just start to call and then see if that agent can get you like on an auto search, and set up on that. I think that's, like having that initial consult, setting up a follow-up meeting and see if they call you back during that follow-up meeting, setting up an auto search, and kind of seeing who's able to bring you deals, who's able to at least be like, hey, I'll work with you and I'll go out and market this area for you if you know specifically what you want. At least that's what I like to do with investors that I work with. Is I like to, once they narrow down their criteria, then I create a marketing campaign and I go out and I try to help bring in those properties for them if it's going to be a longer working relationship. So that's my 2 cents. Hopefully that's helpful.
Well, that's impressive. I don't know if I've ever had anybody do that. I mean, I've had them search for me every day, but not do a marketing plan.
Yeah. I have a lot of fun with that portion of it. So I like go out and trying to find the opportunity. So maybe that's just something that I like to do. I think there are some really good agents out there that do market certain areas and have their foot in what's going on with other investors and networking and everything. So, if they're a really busy investor agent, why would they give the deal to you than someone else? Then maybe you could, as long as you build that relationship up, you can always, if the numbers are really good for your return out of state, maybe you can negotiate, the list back, like you said, with them at a certain rate or whatever that is, so that, everyone's building trust in that relationship and there's something that they're looking forward to as well, because agents don't get paid until something closes. So
Yeah.
it's kind of can be a high risk business, if they're unsure of the working relationship they have with someone.
No, I understand that. So, all right. Thank you. Good advice.
Yeah. Do you have a place in Georgia you're looking at, or?
Yeah, my daughter's going to law school down at Emory. So I thought I'd buy a house for them and then, get a fixer and, basically do a burr in their name. And then when she graduates in 2.5 years, then they can take that money and, buy a place in LA. So.
Yeah. That's awesome. I feel like that's gonna be me when my little one grows up. I'll be like, oh, you want to go here for college? Well, let's just see if we can buy you a rental and you can live in it. Well, or something like
that's
that.
how
So
that's how we started in real estate. We knew we couldn't afford all the stuff we wanted to give our kids, so we bought a rental for each kid when they were little, and
yeah,
it paid for their wedding, their college, their first house. I bought my oldest two. I've helped them buy a house, but yeah, my youngest didn't want to buy in LA. They didn't, her husband thinks you got
yeah,
to put 20% down and all that stuff, and it's amazing how much my kids don't understand what we've done over the years. I've never
yeah,
put 20% down. So
yeah. There's lots of different ways to buy a property. So I think it's also important to have your agent, in my opinion, understand all the different ways on how you can purchase a property. So, with seller financing or a lease option, and other ways as well. So you weren't here on the call earlier, but I've been house hacking since 2016, and now we have a 2.5-year-old, and we just moved into this new duplex, and it's a seller finance duplex. And all these properties are going to go towards retirement or their college and all of that we've been moving around into. Although I don't know if we're gonna, I do want to say with house hacking, it gets to a point where it's hard to leverage your family. So we might be transitioning from house hacking because my husband doesn't necessarily want to do the honeydew LLC handyman. So idea
none of
that
us
I have,
do.
yeah. And you get to a point where you just have your kids and their activities and things. So I think moving forward, we have some leverage we can use and such, so we can do investing a little bit differently, but we'll see.
I think my
And
favorite day of being a landlord is when I hired a property management company and didn't have to do that stuff anymore.
yeah, we are. I have a few house hacks now. I'm on my 5th one, and I still self-manage, and that's fine for now. But I know that kind of moving forward, I need to think differently and hire a property manager perhaps and things like that, just so that you have to leverage as you're growing, so we're probably heading in that direction. I was going to ask you, are you what type of properties do you invest in Tacoma?
1 to 4 units,
Okay.
and then we do flips anywhere, but I'm limited it. I did one that was a couple hours away, 2.5 hours away last year, and I'm not going to do, or 2 years ago, I'm not going to do that anymore. So, you were going to say you had something?
Yeah, I have a buyer looking in Tacoma right now. So and for like a 1 to 4 unit property. So yeah, I was just seeing if there was a connection there at all. So
Yeah, right now, like I said, they're occupied, and we thought we were getting rid of one last November. They got 21,000, 24,000, something like that behind in rent. And I've never had anybody pay that kind of money before, but
oh wow.
they kept getting the judge to give them a continuance until he said no more, gave him a week to get out. And on day 6, they brought us a check, well, to the service that we hired to evict them. But yeah, I mean, so it was nice to get the money, but that was going to be my house I was going to sell this year.
Yeah. Well, if you end up selling something, I could or deciding that you might sell something and are interested in a buyer looking at it. I have a buyer that's looking in the Tacoma area for a 1 to 4 unit property. I can put my number in the chat in case something works out.
Yeah, I don't see the chat on my phone, but you see my number. So if you want to text me later, that'd be great.
Okay.
Yeah, that's the one disadvantage of doing the phone instead of the Zoom.
Oh yeah. Okay. I took a screenshot, so we should be good on that.
Okay. Cool.
yeah, well, does anyone else have anything? We're going to be getting close to the end here. I just wanted to bring up my house hacking today. We had some good conversation around that, what I'm seeing in the rental market, and leveraging house hacking and leveraging your family. So, and the skills of others, like your friends, like, hey, do you want to come over and paint? They don't, they won't. They are busy. People have busy lives. So anyway, as I wrap up my house hacking and this meeting conversation and this meeting here, I am personally looking forward to what the next property is that we get. So hopefully my goal is to start looking for a small apartment, like a 5 to 10 unit, something like that. I've done some property management in my past, so I feel like I can, take something like that on, or at least include that in the numbers and have someone else manage it. So anyway, that's my goals here, probably going forward as I finish my house hacking journey here. So we'll see though. I say I'm not going to house hack, but then you might find a deal or something. So we'll see what happens. So yeah. I kind of also with house hacking, you move around a lot. And I know that might bug some people, but it's like refreshing. I feel like to be in a new place every so often and redecorate. So anyway, well, I feel like I'm just trailing on here at the end. So if no one else has anything, then we can probably wrap up here a couple minutes early.
Perfect. Thank you. Thank you.
Okay, thanks a
good.
lot.
Yeah. Take care.
Okay, bye everyone.
Bye. Bye.
Thanks, Holly.
You're welcome. Bye.